Welcome to Housing After 60. I am Charles Odell. On this site, we analyze the math and the reality of senior housing to find your best options. Let's get started.
Welcome to another deep dive from Housing After 60. Today, we are looking at how to turn your backyard into a powerful financial tool, all based on our latest research at housingafter60.com. You know, this quote from our founder, Charles Odell, it really just cuts right to the heart of what we're talking about today. He says, I look at it and see $3,000 a month in untapped rental income. And look, that might sound a little cold, but let's be honest. In today's economy, our property can't just be a home. It has to be a critical asset, a tool for hedging against inflation and making sure our financial future is secure. So let's start right there with that first principle. We're talking about building what's called an accessory dwelling unit, or an ADU. This isn't just some passing trend for creating a home office or a guest room anymore. For a lot of us, it's becoming a core financial strategy. Honestly, for some, it's a flat-out necessity for locking in a secure retirement. Yeah, this slide really lays out the mindset shift, doesn't it? On one side, you have that traditional view. The backyard is for memories, for a gazebo, for kicking a ball around. But on the other side, that's the 2026 view. It's underutilized capital. In this new way of thinking, every single square inch of your property has to justify its existence on your personal balance sheet. Of course, an investment this big demands a really clear-eyed look at the numbers. You have to know what you're getting into. So let's pull back the curtain and break down the financial reality of what it takes to build a profitable ADU. Okay, so here's the number you're probably wondering about. The all-in cost is typically going to fall somewhere between, say, $195,000 and $340,000. And yes, that's a significant number, no doubt about it. But the key is to see it not as an expense, but as the capital investment for an asset that's designed from the ground up to generate a really high return. And this table gives you a pretty good idea of where all that money goes. We've broken it down from permits and foundation work all the way to the final finishes. Now, of course, this is a simplified national average. If you want the real nitty-gritty with detailed regional labor costs, you'll absolutely want to check out the full post on housingafter60.com. But here's the thing that surprises most people. Skilled labor, it often costs more than the actual materials. So here's the payoff, the bottom line. Despite that big number up front, you are typically looking at getting every single dollar of your investment back in under a decade. I mean, when you stack that up against other long-term investments, an ADU really starts to look like a powerful and relatively fast financial engine. All right, let's get into the technical side for a minute. Let's see how this thing actually comes together. Because a profitable ADU isn't just about spreadsheets and financial math. It's about the engineering. Getting these nuts and bolts details right from the start is what separates a gold mine from a money pit. Everything, and I mean everything, starts from the ground up. Our research points overwhelmingly to using what's called a monolithic slab foundation. We're talking a minimum of 3,500 psi concrete. Why? It's simple, really. It's poured as one single solid piece. That design completely eliminates crawl spaces, which is huge because that means you're preventing moisture, rot, and pests, all those big maintenance headaches that can just eat away at your profits down the road. Next up, you've got the guts of the building, the mechanical, electrical, and plumbing, or MEP for short. As we noted on the site, this is the phase where budgets just love to go off the rails. The absolute key recommendation here is to install completely separate utility hookups for the ADU. This makes it a truly standalone asset, which is not only crucial for its resale value, but it also prevents that nightmare scenario where a tenant's clogged drain becomes your weekend project. Now, this slide shows a really clever cost-saving design trick. It's called a wet wall. The idea is just to line up everything that needs plumbing, your kitchen, your bathroom, your laundry, all along one central wall. It sounds simple, but this move dramatically cuts down on piping costs, it speeds up the build, and, this is the most important part, it seriously minimizes the number of places where a leak could happen in the future. It's a tiny detail that has a huge impact on your long-term profitability. Okay, so building a solid structure is one thing, but that's only half the battle. Now we've got to talk about how to protect it. How to protect your investment from all the financial and legal hurdles that can turn a brilliant idea into a bureaucratic nightmare. One of the very first things you need to be aware of is a really critical tax trap set by the IRS. It's called IRC Section 121. That's the rule that often lets you sell your main home tax-free. But, and this is a big but, if your ADU is treated as a rental business, you could lose that tax protection on a portion of your property. It's It's a complicated issue, and for the full, detailed breakdown, the article on housingafter60.com is an absolute must-read. Don't skip it. Now, this next point, it might sound like some kind of riddle, but I promise you it is a very real financial trap set by a lot of local governments. So how can a measly 2 square feet end up costing you an extra 20 grand? And the answer is 749. That's it. That's the magic number. You see, in so many cities, the second an ADU hits 750 square feet, bam, you get slammed with these massive impact fees. They're basically charges for city services like parks and roads. This little strategy has a name. It's called regulatory arbitrage. Just by designing your unit to be 1 or 2 square feet under that fee threshold, say 749 square feet, you can legally avoid paying tens of thousands of dollars. It is probably the single most powerful cost-saving move you can make before you even break ground. Okay, so we've walked through the costs, the construction, the codes. Let's bring it all home now and look at the true total financial power of this asset. Because it's more than just the rent check. This chart really puts it all into perspective, doesn't it? On the left, you've got a safe, standard 5% CD on a $250,000 investment. That'll earn you about $12,500 a year. Not bad, but look to the right. The net rental income from an ADU, even after all the expenses, can be nearly double that. From a pure cash-on-cash return, it's not even a fair fight. But like I said, cash flow is only one piece of the puzzle. The total return also includes the appreciation your ADU adds to your property's overall value. And then there's this powerful and often completely overlooked benefit, something we call the caregiver hedge. The caregiver hedge. This is a potential game changer. Think about it. If you ever need care later in life, that ADU can house a family member or a professional caregiver. This alone could save you $5,000 to $8,000 a month in assisted living or facility costs. So you see, it's not just an income source anymore. It's like a specialized insurance policy that actually pays you to have it. And that right there brings us to the ultimate point. When you factor in the rental income, plus the property appreciation, and the massive potential savings on future care, the picture becomes crystal clear. Your backyard isn't just a lawn, it's a financial life raft. Before we wrap up, just a few final critical action items. First, spend a little extra on sound mitigating drywall between the units. Privacy is priceless. And most importantly, do not, I repeat, do not make that final payment to your contractor until you have the official certificate of occupancy from the city inspector in your hands. That piece of paper is your ultimate protection. Thanks for watching. For more guides and the full article on this topic, head over to housingafter60.com. Don't forget to check the links in the description below.
Your peace and enjoyment in retirement depends on the right housing strategy. Visit housingafter60.com for our full analysis and cost transparency guides. I will see you in the next video.